So just to bring life to this, Justin, I think it's great to talk about this sort of big picture. But if we were to kind of zoom in for a minute and just talk about one of these deals. So again, not having time to talk about each of your 10 commandments, but just looking at lifestyle first, just these three: lifestyle first, mitigating risk, an invisible deal. What's an example of a deal that you've invested in the last year or so, say, just to make it somewhat recent, that kind of checked off those boxes, just to kind of bring it to life for us? Because we're not talking about the stock market here. You gave us some of your early deals buying mobile home parks, but what's one that's been a little bit more recent to kind of make this, dimensionalize this for listeners and viewers?
Sure. Well, one of the big things, one of the big trends that's happening right now is we're seeing a lot of real estate and retail brands that are selling for pennies on the dollar. So I could give several examples of industries that are hit hard, but these distressed assets are selling for way under market. And what a great opportunity to buy an asset. This could be, we've bought some former, Fortune 50, Fortune 100 companies' headquarters. We've invested in retail brands that are either in bankruptcy or pre-bankruptcy. And so these not only are unbelievable deals, but we're getting them for a price that is so low that literally the worst thing that could possibly happen could happen, and we could still make our profit back. And so, I would call that major, risk mitigation or reducing the risk. It's invisible because most people don't know about it. A lot of these are special investor groups, or a lot of these are deals where literally they find it, they put it under contract, they've got to raise the money in like 48 hours, and then it's done. It never hits the market. It's off market. And you just have to know the right people to get access to those deals. But they're all over. And so a lot of these, we were able to, scale, get them, increase the value. Some of them were scaling online, for a lot of the retail brands that are going under. A lot of the real estate we're able to buy and then fix up and then lease to a lot stronger groups like government agencies or Fortune 50 companies. And so these are just great opportunities where it creates a lifestyle because you have other groups that are managing all of the aspect of running the business, professionals that this is what they do for a living and they operate. You've got your risk protected because you're buying it so cheap. And then they're totally invisible deals. And, quite frankly, what it does is it leads me to the fourth principle, the fourth commandment, which to me is one of the most important ones. And that's getting your principal back quickly. And so whenever I make an investment, part of reducing the risk is finding a way to get that principal back as quickly as humanly possible. Because the moment that money is out of the deal, the risk is gone. And now it's all upside and it's all house money. And a lot of these deals, I'm getting the money back literally in a year or less, or in 2 years or less. And so, there's just so many opportunities to structure deals differently than what most people even realize, and collateralize these deals. So for example, what that means is I have assets backing these real estate transactions or these retail brands that if anything goes wrong with the deal, I have assets that are worth 5, 10, 20 times the value of that actual asset. So if anything goes wrong, I can get my money back. In fact, if anything goes wrong, I'll end up even better off.